Good day, my dear students. In this video, I will be presenting how to complete the 10 columns worksheet of formative 2-3. So this is the problem here. Let me download the problem first. Okay, and then open the problem. Okay, so this is it. Yeah, I think it's already open here. And then let me open an Excel file. And here we will be using Excel for the 10 columns worksheet. So we have here the problem already and then the worksheet. So the first step of completing the 10 columns worksheet is to set up the worksheet. So the worksheet has the company name. Um, so I'll just copy the company name here. And then it has the title of the document, which is the worksheet. And then the date, which is December 31. So the date is usually the end of the accounting cycle, wherein the worksheet was that covers the transactions of the worksheet 31, 20, 24. And then we have here the accounts, and then the first three column is intended for, let me format the date first, format cells, and then the date should be um, this one, and then uh, alignment of the date should be here. Okay. And then the first three columns of the worksheet is intended for the unadjusted trial balance. The first column is for the accounts, and this the pair of columns after the account is for the unadjusted balances. So I hope I can copy this one. Hopefully, I can copy this one. Copy and then paste. Yeah, it was possible. And then I think during the activity, we realized that there were additional accounts that were not included here, and one of them was the income summary account, which is an equity account. So I'll add it appropriately after the withdrawal account to the income summary, and the other one was accrued expense payable or accrued expenses payable. Expenses. Let me copy the amounts first so that I before adding the two accounts so that I won't be formatting the amounts anymore. Okay, and that should be it. And then advertising expense. Oh, what happened? There should be, yeah. Sorry. The income summary wasn't deleted yet. And then, okay, and then let me try it again. Okay, it's more like it. And then, so I will insert here the income summary because it is an equity account. And then I will also insert here the accrued expenses payable account. And then, so this is the unadjusted um, trial balance. And then it should be debit and credit here. Debit, sorry. uh, Credit. And then alignment should be at the center. Okay. And then I'll just check the formula for the totals. Make sure that the debits and credits, or total debit and credit of the unadjusted trial balance, are equal. And then copy the formula, and then yeah, they're equal. And then probably there should be a footing here, double footing, uh, one top and double bottom border. And then okay, so this is the initial stage of the preparation uh, of the 10 columns worksheet. The next step is to journalize the um, adjusting entries in the worksheet. Usually it is written in the worksheet to assist the posting of the adjusting entry to the worksheet. Okay, so the first adjustment is ending inventory. Um, the standard procedure for adjusting ending inventory is first to close the beginning inventory, which is usually included in the unadjusted trial balance. So this is the balance under the periodic inventory system. The balance of the merchandise inventory in the ledger before adjustment for the ending inventory is the balance of the inventory from the previous inventory count, which is the beginning inventory for the current period. So uh, the first step of adjusting the merchandise inventory account under periodic inventory system is to close the beginning balance of the merchandise inventory, and the entry is um, I may also let me copy this adjusting in this information for adjusting entries here, and should be um, okay. And then this is E, sorry. And then okay, and then the first adjusting entry to close for to set up ending inventory is to close the balance of the beginning inventory, or to make it zero. So this is the balance of beginning inventory here is debit. So to close it, we have to credit it, and the um, account debited is income summary. Here, and then probably, oh, and it should be let me uh, income summary. um let me just add some formatting here, and then this one is, oh no, sorry, should be um should be left alignment. Okay, income summary, and the amount is 627. So this is the standard entry to close the beginning balance of the merchandise inventory, and then credit to merchandise 627,000. And then the memo should be, or the description should be, to remove the balance of the beginning balance, sorry. To remove the beginning of the inventory account. And then uh, let's put it here, or like that. And then the next entry after removing the beginning balance of the merchandise inventory account is to set up the ending inventory balance, which is determined from the inventory count, and it was provided in additional information letter A. So the entry is debit merchandise. Again, this is standard entry to set up the ending balance of the merchandise inventory account. The amount is 532,000, and then credit to income summary, and it's 532,000. Um, I will uh, anyway. I'll just put that there. Leave that with 2 decimal points. To set up the ending balance of the inventory account. Okay, and then letter B. Insurance coverage with premium of 18,000 has expired during the year. So 18,000 has expired, means that this amount, this 18,000 is the expense portion from the prepaid insurance of 54,000. So 18,000 of the 54,000 paid insurance prepaid during the year has become an expense. So prepaid insurance was recorded using the asset method. Under the asset method, the adjusting entry is to recognize the expense or expired portion. The expired amount is already given here. So the adjusting entry is very straightforward to record the expense, uh, insurance expense portion, which is already given, uh, and that is 18,000. So no need for computations. So the entry is debit insurance expense, um, 18,000, and then credit. So debit insurance expense 18,000 to recognize the expired or expense portion, and then reduce the recorded prepaid insurance account in the unadjusted trial balance by crediting prepaid insurance 18,000, and then to record the expense portion and to adjust the recorded um, prepaid insurance. Okay, and then the next information for adjustment is the depreciation. So depreciation here is the automatic systematic allocation of the cost of the fixed assets into expense over its useful life. The depreciation amount is also given already in the additional information. So the adjusting entry is very straightforward. Debit depreciation expense, um, 25,000, and then credit accumulated depreciation. 25,000. Okay, and then to record depreciate the expense of the office equipment. And then the next or the fourth information for the adjustment is the office supplies. Office supplies remaining at year end amounted to 15,000. So remaining at year end means this is the unused supplies at the end of the year. Unused supplies or being unused they are the asset. They are still asset as of year end. So in the trial balance, the company purchased have a total of 68,000 available supplies for use during the year. So this is still an asset under in the unadjusted trial balance. Um, but at the end of the year, it was determined that the remaining unused asset is only 15,000. So a portion of this 68 and total available office supplies during the year uh, is already or has been used during the year. The used portion is the expense portion. So since this is asset, the adjusting entry for a prepayment recorded using the asset method is to record the or recognize the used portion of the asset. So the used portion is it's called supplies expense. Is recorded using the supplies expense account, and the used portion is computed by deducting the unused or remaining office supplies at the end of the year from the total supplies available for use during the year. So the total available supplies for use during the year is 68,000, which is um, provided in the unadjusted trial balance minus the office supplies remaining at the end of the year, which is 15,000. So the used portion, oh, sorry, equals 68, 68,000 minus 68,000 office supplies available for use during the year minus 15,000 office supplies remaining at the end of the year. And the net difference is the office supplies used during the year, which is 53,000. And then the account credited is office supplies to reduce the balance of the office supplies in the unadjusted trial balance from 68 uh, uh, eh, supplies from 68 by 53,000 to make it 15. So credit office supplies 53,000. So after posting this entry, office supplies will or the balance of the office supplies will become 15,000, which is equal to the remaining office supplies at the end of the year. And then to record the used portion of the office supplies and adjust the balance of the asset office supplies account. Okay, and then um, Lastly, sorry, this is D. This is D. And lastly, we have the uh, salaries or accrued salaries. So accrued salaries is recorded by recognizing the expense and recognizing liability as well. So accrued salaries is salaries expense. Mm, Salaries expense, and then credit accrued. It could we can use here accounts payable, salaries payable, or accrued salaries payable. But I usually prefer accrued expenses payable. But again, if you will use accrued salaries payable or just salaries payable, it is still correct. Um, Especially if there is no account given for that purpose. So the amount is 9,000 to recognize the salaries expense on accrued salaries expense year end. Okay, so these are the journal entries for the adjustment. We will now post the journal entries to the worksheet, and then we'll just uh, and copy, and then um, paste formatting. So the first adjusting entry is debit income summary 627,000, and then credit merchandise inventory 627,000, and I might as well add a column for the letters here. Mm, And since I've already created the adjusting entries here, I might not need this Word file anymore. So I'll make this full view. And the first adjusting entry is debit income summary. This is A1, and then uh, and this one is also here. Ending. Oh, uh, here. Okay, and copy formatting. Oh, make it 10. 10. And then let's make this 10 also. 10. And the other one is also 10. Column math. 10. Okay, and then this is A1, adjusting entry A1. Then the next adjusting entry is debit merchandise inventory 532,000. So, and credit income summary 532,000. and this is A1, adjusting entry, letter A, 2, and then this is also credit of adjusting entry, letter A. And then the next letter B is debit insurance expense here, 18,000, and then credit prepaid insurance 18,000. Um, here. Mm, oops. And then here. Okay. And then um, okay. Uh, so debit prepaid insurance, credit insurance, no, debit insurance expense, credit prepaid insurance. So this in adjusting into letter B, and then um, insurance expense. Then the next adjusting entry is to record depreciation. So debit depreciation expense here. The amount is 25,000, and credit accumulated depreciation, that's 25,000. And then this is adjusting into letter C. The next adjustment is to record the used portion of the office supplies. The entry was debit office supplies, supplies expense 53,000, and credit office supplies 53,000. And then this is adjusting entry letter D. And the next adjustment is um, to record the accrued salaries expense. The entry is debit salaries expense. The amount is 9,000, and then credit accrued expenses payable 9,000. And this is adjusting entry letter E. Okay, and here the adjusting entries have been posted to the 10 columns worksheet. So let's add determine the totals of the debit and credit adjustments, or just adjustment amounts on the year. Oh, Z, and then Control C, and there adjustment, or the debit and credit entries of the adjustment are also equal. Let's move forward to the adjusted trial balance pair of columns. So insert, and then make use of these columns. Uh, Copy and paste the formatting, and here we have adjusted trial balance, and then should be debit and credit. Okay, and for the adjusted trial balance, um, we will merge the balances in the unadjusted trial balance and the adjustment columns. So this is the adjustment columns. So to merge it, we have debit plus for accounts with normal debit balances. The formula is debit plus debit in the unadjusted trial balance plus debit in the adjustment um, column minus credit in the adjustment column. So debit in the unadjusted trial balance plus debit in the adjustment minus credit in the adjustment column. So of course, if there is no entry in the adjustment column, you can just carry forward or move forward the balance from the unadjusted trial balance. So just like here, cash and accounts receivable, which don't have entry in the adjustment column, so the um, balances can be carried over to the adjusted trial balance. And then uh, for the merchandise inventory, again, debit in the unadjusted trial balance plus debit in the adjustment column minus credit in the adjustment column. And the same also with prepaid insurance, which I will just use the formula from merchandise inventory, copy it and paste to uh, the prepaid insurance raw, as well as the office supplies, the office equipment. And then we have here accounts payable has accumulated depreciation has a normal credit balance. So I'll skip that for now. Accounts payable has a normal credit balance. Accrued expense payable has a normal credit balance. And then gun capital has a normal credit balance. Then we have general gun withdrawals. Sorry. And then income summary. The formula here is you can either use the debit plus credit minus debit plus debit minus credit, or credit plus credit minus debit. And um, the column with the higher amount is will carry the balance. So income summary here, you have debit minus credit. Debit has the higher amount. So in the adjusted trial balance, it should carry the difference as the balance of the account, 95,000. And then the sales account has a normal credit balance. Sales returns and allowances has a normal debit balance. So paste the formula there, debit plus debit minus credit. The same also with the discounts, sales discount. Then we have the purchases has a normal debit balance. Purchase returns and allowances has a normal credit balance. So I'll skip that for now. Freight in has a normal debit balance. Salaries expense has a normal debit balance. Advertising expense has a normal debit balance. Then we have insurance rent expense has a normal debit balance. The same with insurance expense. It has a normal debit balance. Depreciation expense has a normal debit balance. And lastly, we have the supplies expense, which has a normal debit balance also. And for the accounts with normal credit balances, the formula is credit in the unadjusted trial balance columns plus credit in the adjustment, and then minus debit in the adjustment section or column. And then I'll just copy the formula for the remaining accounts with normal credit balances, like accounts payable. Copy the paste the formula there. Accrued expense payable, paste the formula there. Gun capital, paste the formula there. Then we have the sales account, which is a normal credit balance. The purchase returns, allowances, and then purchase discount, which also has a normal credit balance. And I think all the balances of the accounts have been extended to the adjusted trial balance. Let's determine the the um, total of the debit amounts in the adjusted trial balance. So the formula is sum. I'll just drag here and then copy the total formula for the debit column in the adjusted trial balance and paste it to the credit and the total row in the credit column of the adjusted trial balance. And then here. Okay, so the totals of debit and credit in the adjusted trial balance are also equal. Um, mm, and then, so the total of debit and credit in the adjusted trial balances are equal. We will proceed to the next column, pair of column, which is the income statement column. And I'll copy the format of the adjusted trial balance columns, paste it for in the next pair of row. Oh, what happened? Sorry, man. Uh, format. Okay, and this should be the income statement. And then, okay, and then under the income statement columns, extend you have to extend the balances from the adjusted trial balance of the accounts such as income and expenses, including the income summary account. So extend the balances of the income and expenses accounts to the income summary columns, and also the income summary, the balance of the income summary account. So I'll just copy these amounts here, and in using Excel, I'll copy this one, and in pasting them under the income statement columns, I'll use paste values to make sure that the values are pasted instead of the formula, because if I will paste the uh, here the formula, I use paste here, it will copy the formula instead, or paste the formula. So that in using Excel for this purpose, copy the amounts of the income and expenses accounts, including the balance for income summary. Copy them and then paste the value under the income statement columns, or in the income statement columns. And then this one here has a different footing format. I'll delete that one. Determine the total of the income or debit and credit under the income summary or income statement column equals sum. And then, so um, the total debit and credit under the income statement column are usually not the same. So if total credit is higher than total debit, it means that the company earned an income during the period. And then if the total debit is higher than the total credit, the company has generated a loss during the year or during the period. Um, Here, uh, in this problem, total credit is higher than the total debit. Uh, Also, it is also possible that the total debit and credit will be equal. Uh, if that happens, it means that the company did not earn any income or incur any loss during the period. So here, the total credit is higher than total debit. So it means that the company earned an income. And then place the difference under the lower amount to balance, to get the equality of the total debit and credit in the worksheet here. So higher amount, again, place the difference under the um, lower amount or lower total in the income statement column. So the formula is uh, bigger amount minus the smaller amount, and the difference is called net income. So again, this is net income because total credit is higher than total debit, and then determine the total, uh, and then copy the formula, paste it under the credit column, and they should be equal. So this is again total, and then lastly we have the balance sheet columns, and paste the formatting here, and this should be the balance sheet, and, and so under the balance sheet columns you have to move forward or extend the balances of assets, liabilities, and equity accounts from the adjusted trial balance to the balance sheet column. So I'll just copy the balances of assets, liabilities, and capital up to then withdrawals. Now, although um, income summary is a temporary equity account, but income summary is used to hold the um, income account, the net income of the company during the closing procedure. So that is why its balance in the worksheet is included in the income summary, income statement column. So for the balance sheet, it's assets, liabilities, and up equity up to the withdrawal account. So I'll copy this one, and then under the balance sheet column, paste the value, and then determine the total. We can use or copy the total formula under the income statement column, or we can also create uh, the total formula here, sum of all the amount in under the debit or credit column in the balance. And then once you have the total of the debit column in the balance sheet, you can just copy it and then paste it in the total row of the credit column for the balance sheet. So here, if the total debit and credit of income statement is not the same, it is also expected that the total debit and credit of the balance sheet columns are not the same. And the difference between the debit and credit amounts, total debit and credit of in the income statement columns, is also the difference between the debit and credit columns of the balance sheet. So if the difference of the debit and credit columns in the income statement is written on the debit under the debit column, that difference is written in the credit column of the balance sheet. Whereas if it is on the reverse, if the difference between the total debit and credits of the income statement column is written in the credit column, then that difference is also written on the other side in the balance sheet column in the debit sections. But here, since the difference between the total debits and credits of the income statement is written under the debit column, that difference amount is written on the other side or in the credit column shall be written in the other side or in the credit column of the balance sheet. And then get the total to determine the equality of the overall total of the debit and credit. Oh, oh equals and then copy the total and paste it. Okay, so the grand total of the income statement and the balance sheet column is now equal. And here we have determined that the company generated a net income of 495,000. Okay, so the worksheet or the purpose of the worksheet is to assist in the preparation of the income statement or the financial statement of the company, particularly the statement of profit and loss, or sometimes it is called income statement or statement of financial performance, statement of performance. And the other one is balance sheet, or sometimes it is called statement of financial position. So, and during the process of preparing the worksheet, the net income is also determined in advance before the statement of financial position performance or income statement is prepared. So here we have completed the preparation of the 10 columns worksheet.